For more on what the Fed's move could mean for U.S. markets, we're joined on the Squawk Newsline by Allianz Chief Economic Advisor Mohamed El-Erian. Said we get 30, and then we got to think about what to do at that point and reevaluate. I mean, 28, can I round that up to 30, Mohamed, and get your comments? We're getting a little bit of a bounce today, 875 points. The market typically, if it is getting ready to bottom, it doesn't want to let people get in at the very bottom, right? I mean, sometimes you do see a sharp bounce. Do you think this is it, or we're going to perhaps test the lows and make some new ones?
So good morning, Joe. You're going to hear a less decisive and less directive view from me than you have in the past. But listen up, because I think it's important for people to understand what's going on. And overall, you're still going to hear me being somewhat cautious. So why am I less directive in terms of going down even more? Because of what you've heard. Policymakers have finally woken up and they're moving. And we heard about Congress. We heard about the Fed. And second, valuations are more attractive. And third, on the health side, what Scott said in the earlier segment about testing is important. But there's a couple of things. One, I don't sense this is enough of a critical mass. We're getting closer to critical mass that will stabilize this, but not enough because fundamentals continue to worsen and technicals are really shaky. And second, we haven't solved an inherent contradiction between health approach, social distancing, isolation, separation, and on the other side, the reality of how this economy is wired, how policy is transmitted, how the private sector operates. So this is going to be really choppy. I still think that long-term investors should be cautious, but it's getting less scary than it has been for a while.
Well, I mean, I listened to a litany of what you talked about there, and I couldn't help thinking that in the past it's never exactly the same. But there's a litany of things, and the market technically starts acting one way or another, and it doesn't seem to matter what the fundamental. You can see some commonalities in the way a market reacts to whatever shock it's reacting to. Are you seeing any technical things that would indicate to you that there's some capitulation or exhaustion, or that the message of that we're at risk was finally driven home to the markets yesterday, or do you think there's still more to learn as the health effects play out?
So yesterday, no matter which segment you looked at, you saw a lot of people being shaken out. You saw trapped longs trying to get out at any price. You saw people, I mean, there was so much distress selling going on. The problem is there wasn't enough liquidity to accommodate them all. So we still have people looking to get out that need to be accommodated. The real question is not whether you don't have people looking to get out, it's whether you have a lot of people looking to get in. That's the key issue. And I cannot as yet identify a critical mass of buyers. And that's going to be key. When you look back as to what establishes a bottom, it's not because people stop selling, it's because buyers come in size. So that, I think, is what we have to look and assess on the technical side.
I just wonder, Mohamed, like when we talk to you in 2 weeks, it's impossible to say, but what do you think you're going to be focusing on at this point? Will it be the operations of the markets, or will it be the epidemic, the parameters of where the epidemic is at that point? What do you think we'll be talking about then? Will it be what businesses are still closed and what GDP looks like for that quarter?
So first, I hope we're not talking about the functioning of the markets, because if we're talking about the functioning of the markets, then we're in a really bad place. And I think that the policymakers, especially the central banks, have had so many incoming calls telling them focus on how markets are functioning, understand, get a better feel for technicals, and they're getting there. So my big hope, Joe, is that we're not talking about market functioning. Right. We will be talking about a global recession. And we have to get used to the fact that we are going into a global recession. Hopefully it will be short-lived, but I can't see how we're going to avoid a global recession.
Hey, Mohamed, how come it didn't help yesterday when the Fed took that action?
Well, first, I think it helped for a while, but a few things came in very quickly. The bounce allowed people to get out, okay? And remember, you have a lot of trapped longs. Remember our initial conditions. We're coming from years in which this very unhealthy codependency developed between central banks and markets. And because of that codependency, too many people bought things that they shouldn't have bought. And they bought them because there was no volatility and because we had the notion that there was a central bank put. That disappeared in the last few weeks. So there's still a lot of reset to go in terms of people's risk positioning, right. Becky.
Mohamed, in terms of the medical numbers, the numbers we're going to be hearing over the next several weeks, you've seen the charts, what they look like. You've seen what the British government's now said about what they're expecting over the next several weeks, and boy, does it look like Italy. My question to you is how you think investors are going to read those numbers and read this information over the next several weeks, and what would turn it around from that perspective?
So I think if you look at the economy, let me start with the economy, because I think the economy is an easier read. Things are going to come to a halt. I've been stressing over and over again this notion of economic sudden stops. And we are seeing them everywhere, Andrew, everywhere. Things just stop. We are seeing events that were not in most people's scenario analyses. We are going to see companies draw down credit lines. We are going to see a sense of this economy is grinding to a halt, and the debate we're going to have is how easy is it to restart it. We will restart it, okay, but not immediately. And that's going to cause a lot of fear, a lot of uncertainty, and a lot of risk aversion. Look at you, Andrew. Look at how you're behaving when you get taken out of your comfort zone. You become more risk averse. That's the reality of us. So on the economy side, we still, unfortunately, have a leg down. On the market side, remember, markets bottom a lot earlier than the economy. It's going to be about this critical mass. It's going to be about this circuit breaker. It's going to be about whether we have faith in that the policymakers have put forward a plan. We need a plan. We don't need everything up front. We need a plan of stage 1, stage 2, stage 3. And I think if markets get that, we can establish a bottom and not contribute to the economic downturn.